Hey guys, alrighty, man. Today was painful. Just absolute directionalist, no movement. Oh, painful. I thought Monday was painful, but Monday was painful in a different way. So Monday, we had. I mean, it's technically Monday we had a bullish trend because we kind of rode the EMAs up, but every other candle was basically a reversal. The difference today was the fact that every other candle was not a reversal, but we just couldn't go anywhere. We had a lot of 5-minute reversals, we had a lot of 15-minute reversals. We had so much times where we looked ready to recover and then we would just get slapped back down out of nowhere. And we had so many times too where, really out of nowhere, we would just get dropped and we just didn't have the support to justify it. So brutal trading, but that's what happens sometimes after a big day like CPI, which really, yesterday really wasn't that big of a day. We put in what? A 1.08% day. Not crazy, honestly, but it is something. So, the question is now, where do we go next? Tomorrow is PPI. All eyes will be on that core PPI. I want to see if we get a push over 0.05%. Forecast comes in at 0.2% right now. We'll see if that holds true or not. You can see most of big tech today is red. Amazon and Google are the only two that were green today. That is interesting to me. I think that's important to note today and really most of this week and even some of last week. Tech was far more bearish, was certainly holding us down, but I could also say in a different way, SPY is the only thing holding us up right now. So looking at SPY here, we didn't even get a new all-time high. Our all-time high was 518.22. We didn't quite get a double top, but we have a really nice hanging man candle, and I do expect this to bring a downside rejection. We did get a nice back test off 514.87 supply though, so we could maybe come back down again and get a double bottom and push up if PPI comes in cool. But if we get a hot PPI, remember, where was the last CPI here? Let's see. Last CPI was here. We had a lot of movement. I think we got PPI the day before CPI last time though. But we got a lot of movement in either way here. So I am looking for a potential rejection. Now we're going to have a major support area from 507.96 to 510.44 if we do come down. But it's tough to bet against the bulls right now. But if you look at really the last, even going all the way back to, I would say, middle of January, it really is 1, 2, 1, 1, 2, 1, 2, 1, 1, 1. It's 1 or 2 days of super strong bullish action that's followed up by 3 to 4 days of choppy bearish action. So, you can see here we had 2 big breakouts, or really this was 1 big breakout. We got 1, 2, 3, 4 chop days, kind of a 5th chop day, boom, breakout. 1, 2, 3 chop days, big breakout, big breakdown, chop day, and a big breakout, chop day. So it's really, really tough to trade this because, we are in a bull trend still, but the actual trend when you watch it intraday is anything but bullish a lot of the time. Going over to ES here. So, again, we had our contract roll, but we did see a really nice double top today at 42.39. So I am looking tomorrow if we can drop lower to put a new supply in up here. And we're going to head for this 51.58 area. We might see some support down here at 51.90. But for the most part here, I am looking for a little bit of a downside move here. Now going over the Qs, yesterday I said I was far more bearish on the Qs, and the reason had been because we have this double tested supply at 445.72. Yesterday, even though ES and SPY had broken out over that range resistance, as you can see here on NQ and QQs, or the Qs, we did not break through that yesterday, and today we even gapped down and almost got an inside candle, but gapped down, and we put a new supply at 443.75. So we now have a double supply, almost triple supply, because this is a double tested. That's why it's the dotted line. So from here, with closing at the 8 EMA, I really do look for another back test of this support at 435.13 to 437.22. But again, if cool CPI or PPI comes in, we might see the upside pop. But again, I do not see the bullishness here from the Qs like we are seeing on SPY. Going over to NQ, same thing. We got the double top I was looking for. We did not even get back to all-time highs. So new supply at 18,473. Didn't quite get down to 18,257 to take that out and break under the 8 EMA here. But again, I'm looking for downside. Now there is a double bottom set up here because of this wick. We could double bottom and push back up over 18,473 tomorrow with a cool PPI. But again, if we break down, we're looking at 17,853 into this 18,038 area as potential target. So not much from the VIX today, but what do you see here? This is, again, our classic bottom candle. I should really start arrowing these here, but let's take a look. Oh, I can never find my arrows. There you go. So if you look right there, you got this candle right here is your reversal. You got that reversal candle. Boom, there it is again. Let's go back over here. Oh, there it is again. We got all these times where we are seeing these reversal candles, and I think this is a very high probability that we get a bounce here on the VIX. Now, again, does it matter? Maybe, maybe not, but seeing all these reversals here is important to note. Again, I've been saying this for really a month or two now, that we do not have a downtrend on the VIX. So we have a kind of a phenomenon here because we have an uptrend on SPY and Qs, but we also really have an uptrend on the VIX for the last 4 months too. And that even goes for the 10-year and the dollar. I've talked about how I'm not even watching them anymore because they just lost their flavor. They just don't do it anymore. They don't show us anything helpful really, because the dollar and the 10-year has also been trending with markets. We've seen them trend up with markets and we've seen them trend down with markets for the last month or two now. So it's really, really tough out there. The only way I can really explain this sort of price action is just that the algos potentially just don't know where we're going. We got a lot of unknowns right now. We just got through CPI, which again, we had such a bullish reaction to a hot CPI, which is anything but bullish. And long term, again, for the economy, and I know that for the economy and stuff like that, seeing CPI rise should indicate to us that the federal funds rate could minimally stay higher for longer, which is anything but good for the market, good for people, things like that. But the market said doesn't care. Now, we do got FOMC next week, and again, we will get that dot plot on Wednesday, and that will be the big ticket item. We very well could get a very bullish dot plot, meaning that the Fed holds steady to its 3 rate cuts. It might say it doesn't have reason to not suspect rate cuts, but I really will be surprised if the Fed says that they feel confident doing 3 rate cuts still after everything we've seen. I really think we are going to see the Fed hold steady, that they're not ready to cut. And I think we're going to see them pull back on expectations to potentially September or maybe even that November meeting before we get our first rate cut. But I hope you guys had a good day today. Tough trading out there. And remember, trading is a long-term game. If you don't have your setup, if you don't see a play that looks good, sit cash. It's better to make $0 doing nothing all day than it is to lose $500, $1,000 just because you feel like you have to trade something. Trade what you see. Don't go into the day with expectations. I try to have a clean slate for the day, obviously play the technicals, but that's where it's difficult. Like today, for example, is a great example of that. On NQ, we got stronger daily sellers, and obviously we're in more of a bear trend. We had a really nice 121 point drop, 0.66% down on NQ. But if you look at ES, what did you get? You only got a 3-point total drop to close the day out here. We're going to close out in 3 minutes. And you had stronger daily buyers. So that's so extremely difficult to trade when you have two different daily daily time frames that are supposed to be kind of congruent more or less, that are fighting each other. It's really hard to be successful with that. So tread lightly in this market. I think we might see some pain going into FOMOC still with this range, but overall, I hope after FOMOC we can get some better movement. So, but hope you guys have a good day, and I'll see you guys tomorrow.